Alright, yes guys, welcome back to another YouTube video. Alright, in today's video, I'm going to be going over my favorite model that has generated me over 6 figures in payouts alone. And this model is actually called the unicorn model. So what it consists of is a breaker block and a fair value gap. So what I've gone ahead and done here is I've created this little diagram for you lot on the training view chart, just so you guys can visualize this strategy a little bit better. So let's get straight into it. So first things first, what pairs can you trade when using this model? The best pairs that work, and from my experience have been very profitable, is definitely the indices. So NQ and ES. If you're on a Forex broker, you can use US 100 or US 500. Literally the same exact thing, but just on a Forex broker. Of course, I do recommend if you're trading this strategy, trade it on the futures using NQ and ES. The strategy works best on NQ and ES, all right? So number one, what you're gonna be looking for when trading this model is, of course, a sweep of liquidity, okay? It's very important. You wanna see either a sweep of buy side liquidity or sell side liquidity. Some sort of liquidity has to be swept. Number two, you're gonna anticipate a clear displacement in the opposing direction. So for example, if we swept buy side liquidity, of course, you wanna wait for a displacement in the opposing direction and target sell side. Vice versa, if we swept sell side liquidity, you wanna wait for a displacement in the opposing direction and target buy side liquidity. Number three, this is very important. You wanna enter off the closest PD array. So what do I mean by that? If the breaker block is closer and it's the first point of entry compared to the fair value gap, then that is the PD array that you're going to be entering from. So I've drawn out 2 examples here. As you can see, in the first example, the breaker block is actually the first point of entry, hence you'll be entering straight away as soon as price retraces into this area. In the second example, the fair value gap is the first point of entry, hence you'll be entering off this PD array instead of the breaker block. This tip alone will help you from missing out a ton of moves, okay? Because there's been instances where I've been waiting for an entry in a fair value gap when the breaker block is the first point of entry and I've missed the move. So this will help you a lot. Okay, number 4, very obvious, okay, target the next draw on liquidity. So in this example here, okay, we've set buy side. What's the next draw? It's going to be sell side, okay? Very simple. But yeah, anyways, let's go over some examples. So as you can see here, we have a bearish example. What does it consist of, okay? It consists of a breaker block and a fair value gap. So if you don't really know what a breaker block is, it's 2 highs next to a buy side liquidity level. It consists of pretty much 2 highs near a buy side liquidity level. So you get this first initial swing high, which is then followed by a swing low, which is then followed by another swing high, taking out that buy side liquidity level. And then of course we displace lower, breaking through this swing low, creating a market structure shift. And then the lowest down close candle within inside that price leg is going to be your breaker block. So in a bearish example, it's always going to be the lowest down close candle. All right, that's going to be the candle that you want to mark out to the right and mark as your breaker block. And usually when we get that displacement, we're going to get some sort of fair value gap paired with it. So you're going to want to wait for price to retrace into these areas, such as the breaker block or the fair value gap. Simply take your entry, put your stop loss at a valid area, such as a swing high, for example, or the displacement candles high, and then just target the opposing liquidity, which in this case is going to be sell side. All right, so let's quickly go over a bullish example here. So literally the exact same thing. It's just going to be slightly different. So instead of 2 highs at a buy side liquidity level, it's going to be 2 lows near a sell side liquidity level. So we get that first swing low form here, which is then followed by a swing high. Any traders that are trying to catch a bounce move of so-called support and trying to long this are going to get stopped out with this second move. So this next swing low is very important. It has to take out the previous swing low next to it. And then obviously the last phase is going to be that displacement leg higher, breaking through that swing high, creating our breaker block, and also leaving an imbalance behind, which is going to be our fair value gap. All you do from that point is you simply wait for a retracement into these areas. Simply take your entry, place your stop loss, and then target the opposing liquidity. So anyways, guys, now that we've gone over some examples, we're actually going to be diving into the live charts, and we'll be breaking down a few trades that we took this week inside of the live trading group. Let's get straight into it. Okay, so just for transparency reasons, I decided to actually show you guys the Telegram chat so you can see the exact trades that we took, including both wins and both losses. So at the end of every single week, I like to do this weekly trade breakdown, okay? Just explaining pretty much every single trade that we took, how much we either won or lost, okay? So as you can see, we closed out the week for a total weekly gain of 47.75 handles, okay? It's not our best week. We've had way bigger weeks, but the price action has been slightly tricky recently, and it's been a very slow start to the month of March, guys. January and February was very profitable for us, but the month of March has been very slow, but it's starting to pick up again. But anyways, let's get straight into it. So Monday morning, as you can see, I always send out liquidity levels for the NASDAQ, which obviously is the asset that I am trading. And then you get an invite to a Zoom meeting where you can watch me trade live. So anyways, we actually ended up taking a short trade on Monday, and it smashed TP for over 63.5 handles. So we're going to be breaking that trade down now. Going into the morning, I had a bearish bias. The reason is we have these relatively equal lows here, and we also have this untapped fair value gap that price has not yet rebalanced. So straight away going into the morning, I'm automatically bearish because the day prior, we had a very, very strong closure here. And now that we've left relatively equal lows, it would be very unlikely for price to start that retracement higher without taking out these equal lows first and tapping into this unfilled daily fair value gap. So I always like to start on the daily time frame to figure out what my bias is for that day. And then from there, I like to go into the 4-hour time frame, and then into the 1 hour, and then into the 15 minutes. So let's start to jump into the lower time frames and mark out some of our liquidity levels. All right, so I like to use a 15-minute time frame to mark out my session liquidity. For example, London highs, London lows, Asia highs, etc. So right here, we have London highs. Okay, if you don't know what London session is, it's from 2 a.m. to 5 a.m. New York time. Find the highest high and the lowest low inside that session. This is going to be your highest high, which is London highs. I'm not going to be marking out London lows because we've actually already swept it. So no need to do that. And we also have a pair of Asia highs up here. We also have some minor sell side liquidity level there. And you could also mark out this buy side liquidity pool up here. So anyways, now that we've got our liquidity levels marked out, we want to jump into the lower time frame and look for a potential trade setup or entry. So in just one moment, I'll be breaking the exact trade down that we took inside of the live trading group. Let's get straight into it. Okay, so in the morning, we actually came down and price started to go higher. Okay, so a lot of people were actually long in this, right, inverse. But what they didn't realize is this high right here, okay, it was a 15-minute high, so a buy-side liquidity level. And at the time, okay, this actually was swept on ES. So what do we call this, right? It's a bearish SMT. And since price already swept this on ES, I'm no longer looking for longs, okay, because the objective has already been met. And it's most likely that we reverse here and actually target the drawn liquidity, which is that daily sell-side level, which is relatively equal lows, and also that daily fair value gap. So you want to align your lower time frame with the higher time frame, okay? You don't want to be trading against it. Also, a very important tip that I forgot to mention is always mark out your 9:45 to 10:15 New York time AM macro session, okay? So whenever you're trading this strategy, just make sure your entry is inside of this window, all right? There's many, many macros that you can choose from. Just make sure if you are trading it, your entry is inside one of these macros. So there's the 10:45 to 11:15 macro, there's the 11:45 to 12:15 lunch macro. There's a ton of macros that you can choose from, but like I said, again, in order for the trade to be the highest probability, just make sure your entry is inside of these 30-minute time intervals. So anyway, number one has been met, okay? We've had our sweep of liquidity. What are we looking for next? We're looking for a clear displacement lower. So let's see if we can get that. Okay, boom. So we got that clear displacement. We've also broken below a swing low, and as you can see here, since it's a bearish example, we have that high followed by swing low, followed by another high, followed by a displacement. So we have two highs next to that buy side liquidity level. We also have SMT, which makes it even higher probability, and then we have that displacement. So as you can clearly see here, our fair value gap is going to be this one, and then our lowest down close candle within inside of this price leg, which is our break block, is going to be this candle here. So which PD array is the first point of entry? In this scenario here is going to be the fair value gap. Hence, I'm going to be taking my entry off the fair value gap. Stop loss, ideally you want it above a swing high or the displacement candles high. But since there's a tiny fair value gap just above that, in this scenario here, I decided to risk 25 handles and just have my stop above all of the imbalances. Okay, so usually I like to risk around 25 to 30 handles max. So that means, you know, if I can't put my stop above the displacement candles high or the swing high, I'll usually have a fixed stop loss of around 30 handles and make sure that stop covers the imbalances. So if price decides to come back into them, you don't get stopped out. And then of course my TP was at this sell side liquidity level here, which is clearly the opposing draw on liquidity, 63.5 handles. There's no need to aim for more. You could aim for the daily fair value gap and take partials, but I would rather just take a 1 to 2.5 risk to reward, full position closing at this low here. So anyway, let's see how this trade will play out. Boom, look at that. TP smashed in under 2 minutes, okay? So not a lot of drawdown there. We had 1, 2, 3 candles and your TP would have been smashed. As you can see, this strategy is very powerful. Once price enters these areas of interest, it doesn't tend to stay there for a long period of time, okay? Usually your take profit gets smashed very quickly, and that is why I love trading this model. So anyways, guys, that is one example that we took inside of the live trading signals group, which is a unicorn model. We're gonna be going over one more example that we also took just so you guys can get a better feeling, understanding of how this strategy actually works. All right, so let's get straight into that one. All right, guys, so this is the second example now. It's actually a bullish example. Of course, again, again, for transparency reasons, just to show you these chats that we did actually take this. As you can see here, we went long, give you a stop loss, TP, and we ended up smashing TP for over 70 handles, all right? So very, very good trade, and let's break this down. And by the way, guys, all of these trades are taken on live stream, so you can literally watch me trade live and copy and execute the exact trades that I take. I also send them into the Telegram chat just in case you can't tune in into the streams, but preferably you wanna be watching me to get the most accurate entries and exits. But anyways, other than that, let's break this trade down. So going into the morning, okay, as you can see, we're inside of that 9:45 to 10:15 macro, which is number one, very, very key. All right, number two, we've had that sweep of liquidity, okay? We've swept London lows. So sweeping a session liquidity and then getting a unicorn model after is usually for me an A+ setup. It really doesn't get better than that. And especially sweeping London lows, it's a very important and major liquidity level that if it gets swept, you're most likely gonna see a reaction from it straight away. So let's see if we can get that bullish displacement higher. As you can see here, we get that low, followed by a swing high, followed by another lower low, and then followed by a high displacing. So in this scenario here, I actually want to enter from this breaker block and this fair value gap here. Unfortunately, price didn't retrace into this area and displaced even further. So once we displaced even further, I wasn't even expecting price to retrace all the way down here to get an entry because there's no reason why it should be doing that. We had that second market structure shift here once we broke above this high. And at this point, I was just waiting for a fair value gap that I can enter from, right? So there you go, as you can see, we had that fair value gap form here, very, very small, tiny fair value gap. I simply put my entry at the edge of that gap and my stop loss was at 25 handles, just below the mean threshold of this down close candle here. TP was at the opposing liquidity, which is this buy side liquidity level here. You can see relatively equal highs. So since the fair value gap is the closest point of entry, I'm gonna be entering from here and you're not gonna be entering from the breaker block, okay? If that makes sense. But anyways, let's see if we can get an entry. Okay, there you go. Very, very strong reaction straight away, as you can see, guys. We were literally inside that gap for 2 minutes max. We got quite close to getting stopped out, but price didn't stop us out and we pushed higher. Okay, as soon as we broke this high, I'd move my stops to break even and now it's a risk-free trade. But yeah, let's see how the trade would play out. All right, and there you go, TP smashed. So as you can see, this was for over 96 handles. However, we only secured 70 handles. And this is because ES at the time actually took this high before NQ did. So I like to watch ES. Whenever it takes a high or low that I'm targeting on NQ, an SMT will form. So once ES took this, I decided to close, secure myself 70 handles, right? And this is just because you could risk having a reversal. All right, ES could take this high, NQ could not. We could get a bearish SMT and continue heading lower. All right, so hopefully this makes sense. But yeah, guys, that is gonna be it for today's video. I hope you got some sort of value out of this and learned something. If you were to get anything out of this video, all right, just make sure to write down all of the key steps. So number one, sweep of liquidity. Number two, clear displacement. Number three, entering off the closest PD array. So what does that mean? If the break block is higher than the fair value gap and you're looking for longs, and that is the first point of entry, you're gonna be entering from the breaker block. If the fair value gap is the closest point of entry, you're gonna be entering from the fair value gap, okay? Very, very important. Number four, target the opposing liquidity. And number five, make sure your entry is inside one of these 30-minute time intervals, which is a macro, in order for the trade to be the highest probability. But yeah, guys, other than that, I hope you lot enjoyed. If you are really serious about getting your trading to the next level and you're looking for pretty much a mentor and someone that you can work closely with one-on-one, then make sure to go check out the live trading signals group in the description. Okay, I go live literally every single morning at 9:30 a.m. New York time, where you can watch me trade live and take trades exactly like these ones that I've showed you today. So yeah, go make sure to secure a seat. But other than that, leave a like, share, and subscribe, and I'll see you lot in the next one. Take it easy.